Hello traders and welcome to another video review. Today is Friday, October 20th, 2023. Let's find out what's going on the Forex economic calendar in the last trading day. We got data published from the Japan national CPI number and national core CPI number. The core CPI number was better than expected, 2.8%. Forecast was 2.7, and the previous reading was 3.1, which means that the core CPI is going down. However, the national CPI is slightly bigger than the previous reading, 0.3 versus 0.2. Core retail sales data from the UK were all worse than expected. As you can see, all around the board we got the minus 1%, minus 1.2. So we will definitely take a look at the British pound today to see how the British pound reacted on this poor data. Germany producer price index, worse than expected, is going down, minus 0.2% versus the 0.4 forecast, and the previous reading 0.3%, which means the producer price index is going a little bit under the water. What else do we have scheduled for release during the New York session? Data from Canada, core retail sales, new housing price index, and wholesale sales. All of this data are scheduled for release at 2:30. Then we got some speeches from the European Central Bank Macron, and 30 minutes later we have a speech from FOMC member Harker, Mester. And that's about it. 7 o'clock US Barker Hughes oil rig count, and at the end of the day we got the federal budget balance data scheduled for release at 8 p.m. Then of course everything else is speculative net position, so they are not really something that I look at during my review of the Forex calendar. Nevertheless, as I said, we should start our technical part with the technical analysis of the British pound. Then we will take a look at the Canadian dollar ahead of the data, core retail sales data scheduled for release later on. So let's start with Canadian dollar. I guess this is my correct chart. There you go. For our chart, British pound versus the US dollar, as you can see, we got this movement to the downside from the highs of 1.2336, then a little bit of the consolidation, but still below 150 periods moving average on a 4-hour chart. And since then we got first breakout, bounce, and now we are approaching this level here, 1.2089 again. Any breakout below this level opens the road towards the lows from the 4th of the October, 1.2036. So basically 1.20 is a big number for the British pound. If we zoom out, we can clearly see that this number here, 1.20, might be a big number for the best, because if we hit below it, then there will be new yearly low for the British pound. So very important number. Please take a look at this. Keep in mind that there is something like that on the 4-hour chart. And the momentum, of course, the momentum, as you can see, has been ranging as well, okay, but we never broke above the level of 50 for more than just a few hours, yeah, and then we go down. So the conclusion is that on the British pound, the bears are in control of the market, and we should see more downside soon. We should see more breakouts to the downside soon. If we remove this range level and then apply it here, of course 1.2089 level must be violated. We just 1.2089, 1.2092, we are 3 pips away today from this level, so not that much at all. Any breakout and the momentum should extend to the downside, and the market should go lower as well. Let's now take a look at the Canadian dollar, so we know something more ahead of the data that are being scheduled for release. This is for our chart of the Canadian dollar. You can clearly see that we are trying to bounce higher. However, this part of the movement to the upside is not actually that much impulsive. So what we should do for sure is to mark our swing high and technical resistance, 1.3783. So of course it's red, and that's a very thick line, so we know where it is exactly. Now what we need is intraday technical resistance 1.3740. Intraday technical support might be located, whoops, not this one, it might be located somewhere here. Okay, never mind, I don't have the time to do this right now. Somewhere here. So 1.3678 might be the technical resistance, but we got plenty of the levels here. But if we take a look at this, we might get the impression that this is some sort of the channel. Look how the market reacts to this kind of a thing, to this lows that are just under the level of 1.36. Something like this, I guess, has a right. There you go. This is a channel, corrective channel. So any spike to the upside would be considered, of course, bullish. Any breakout out of the channel would be considered bearish. So we should pay attention to this situation here, because we might see some sort of a very nice price action, reaction of market participant reaction during the news release, basically, right? So what do we have here? Technical supports, where 1.3542 is the technical support, and maybe one more will be played a little bit lower, not that low, but a little bit lower, 1.3522. So pretty solid technical support. It should be enough to hold the bearish pressure for Friday. And then we will see what will happen. Nevertheless, the main point is that this looks like the directional movement. This looks like the corrective movement inside of the channel. So what we should expect in according to our let's say analysis is this kind of a breakout to the downside. Okay, so that's the outlook for the US dollar to the Canadian dollar. Is there something that we didn't look at this week? Is there something special? Maybe we should take a look on the US dollar to Japanese yen, because yesterday we got this, overnight we got this data released. Nevertheless, even if we take a look here, you can see clearly that the volatility is pathetic right now. So there is not much that this market can offer to the volatility or momentum traders, because it's simply doesn't move that much. We used to have a big volatility. Look at this candle here, hundreds of pips, but since then, this is the beginning of the October 3rd of the October 2023. Since then, the volatility, except this one, has been reduced significantly. So it decreased towards the very, very unpleasant level for the day traders. Day traders don't like it. They don't like the US dollar to the Japanese yen chart right now. Nevertheless, we are getting closer, step by step, little by little, towards this swing high at 150.17. 150 is again a big round number, psychological number. It will act as a magnet for the price. So the price might spike to the upside soon. All right. So we'll have the breakout. The question is, when will be the close, and on what level will be the close eventually on a daily time frame chart, because this is what we are interested in. Of course, if you take a look at this candle, you have a big lower shadow. This candle, big lower shadow from the downside, shadow from the downside, shadow from the downside, down shadow. So there is bullish pressure on the US dollar to the Japanese yen. As long as we are doing this low volatility, step by step increments in a price, in a market rate, basically, then the outlook remains bullish, as the momentum remains positive and strong. All right, so that's the short analysis of the Bitcoin of the US dollar to the Japanese yen, and Bitcoin is coming your way right now. So what do I have here? A 5-minute chart of the Bitcoin. There you go. Very nice spike to the upside from this kind of consolidation zone. This one looks like it looked like the some sort of the, let's say, a triangle. Yeah, something like this, maybe something like breakout the wedge or something like this. We've been trading inside of it. Then there is a very impulsive breakout. Where is the swing high? The swing high is located roughly around 29,000. Yeah, 29,436. And we have, of course, consolidation and the local low, which will be the technical support for the bulls, was made at 29,140. But we are still trying to move higher on the Bitcoin chart. This is 5-minute chart. So the general outlook, as you know, is to the upside. The recent fake news spike high was 30,456. So there is still some ground to be covered by the bulls. Nevertheless, it looks pretty good for the bulls. It looks like this market wants to go up, and it is doing this. So after some period of the impulsive wave progression, we got some kind of a consolidation, some kind of a pullback in form of the triangle, another wave to the upside, some kind of a consolidation, and another wave to the upside should be done soon. So our outlook for the Bitcoin is to the upside, and it should hit the fake news high 30,546 soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.